Good morning, Forex Rob. I appreciate that, man. May profits be upon you too. Thank you. Good morning. Well, it's morning here in the east coast of the USA. Still AM. I didn't realize we had our fallback time. I wasn't thinking about that when I gave the time of this this webinar. I wasn't thinking about it at the time, so forgive me. I would have put it an hour earlier, but it's all going to work out. Maybe we get more people coming in. We shall see. Let me see if I can get this right. But I wanted to start this thing on time without a whole lot of delay. What's up, T? All right. Okay. I'm going to get started. All right. One thing I want to ask is, how's my voice coming over? What's the sound check? What's the sound check? My last message did not come through on TradingView. I don't understand why. It's always something. Always something, I swear. Let me see. I put it in on TradingView. I don't get it. Maybe it'll come through in a minute or something. I don't know. Oh, there it goes. It took a while to get there. I don't understand why. I really don't. Okay. All right. So this is what I want to do. I want to go through. First of all, let me give everybody a good greeting. Hey, Prize. Uh, uh, Thank you, T. This is the RT Money Show. No, actually, it's the weekly Forex forecast. We're coming to you live. All right. And this is for the week of November 7th to the 11th. Okay. The November 7th to the 11th. What I'm going to do is I'm going to go over the individual currency futures first. All right. I'm gonna make sure to go over the old RT money meter, and we'll take a look at the relative strength and weaknesses of each of the individual currency futures, right? And then I'll take a look at the charts. Then I'll go through a list of some some forex pairs and CFDs that I looked at, and have kind of a fix on what's gonna transpire soon. Okay, so but the first thing I want to do, I want to make sure I do it this time because I didn't last time. I want to take a look at the calendar. Uh, I did last time, but somebody had to remind me, and I don't want anybody to remind me of stuff. Okay, so for this week, let's take a good look at this. All right. Aussie, we got consumer confidence and all that good stuff. Not a lot of high impact news. We had a lot of it last week, right? The NFP, the FOMC, and 75 basis point hike, and all this other good stuff, and that roller coaster ride. We're going to take a good look at that roller coaster ride where the U.S. dollar went high and then came back low, and we're gonna take a close look at that on Tuesday. We have retail sales. We have the inflation rate for China. Not a lot of, not much high impact news there. Look at how it does this. It goes from Tuesday to Thursday. I just noticed that. Maybe we don't have anything happening high impact on Wednesday. I'll take a quick look at that. But on Thursday we have CPI. This is important. This is high impact, and this is what is going to slow up or muck up the news. I mean the currencies coming this month. I mean this week. Excuse me. So I want to take a close look at uh, what we're thinking is going to happen here. The CPI, if it comes in hot, if it shows that inflation still hasn't started to, you know, back off a little bit, to cool off a little bit, maybe top out, if it comes in a little hot, expect that US dollar to pop. Expect that US dollar to get stronger and pull up higher. All right. And that's going to turn everything around. The rest of this stuff here is, is normally high impact. It's a red folder. It's going to have a little bit of impact, but this is what the big deal is on at 8:30 Eastern Standard on November 10th. All right, CPI. All right, I should have silenced this. Let me make sure that is silent. Thank you very much. That just drives me crazy when I get an interruption like that. All right, so we're going to look for CPI. Friday, GDP growth for the pound. There's some good news coming out for the pound, so be careful of that. Germany is going to have their CPI. We're going to hear a speech for the euro by ECB members, and Michigan consumer sentiment. Okay, that's it. So really, what's going to be on my lookout is CPI. You're going to hear me bring it up more than once. All right, let me show you what I mean. Let's take a look at the RT money meter. Let me check the. I'm checking the chat right now. Leslie Martin, hello. Lockron, T. All right, we got some team members here. Okay. And let me do a quick refresh on the trading view. Thank you. All right, so it looks like we're up to date. All right. Now, on the RT money meter, I want you to notice some things. All right, you see I'm showing 3 weeks. All right, 3 weeks of updates. All right, the RT money meter tracks the rate of change of each individual currency future over a 15-week period, and I update this list every week so we can get a snapshot of how the individual currency future it may be trending, whether it's a strong one and getting stronger, ranked at the top, the top four, or if it's ranked at the bottom four, or a weaker member, or weaker has a weaker ranking. We want to see if it's also trending down, right? For the US dollar, it's been kind of corrective, and I'm going to show you what I mean. On the 21st of October, it was at 483, ranked number one. Ranked number one on the 28th, a week later, at 2.50. Seems to be pulling back a little bit, right? And 390 this week. You would think from here to here, yeah, it's trending up, but not really. When you see the individual feature, you know what I'm talking about. You'll see you'll see what I mean when I get on the chart. All right. It is still one of the strongest one. I am still bullish on the US dollar because it's still strong. The overall higher time frame uptrend has not been broken. So I'm pretty strong on pretty bullish on it. But do you want to take buys now? Let's be careful. That's all I'm saying. Thursday, we have the CPI data. All right. CPI data could turn that number into a much larger number. All right. And come next week, we might be looking at a 7 or something. All right. So just let's be careful because we have high impact news coming on Thursday. Okay. As far as the euro, ranked number 2 this week at minus 250. Look at how it's been. Minus 330, minus 133, and then minus 250. All right. This is indicative of a correction period. I talked about this last week, right? That it seems that the markets are in correction. All right. I said if you think of it this way, if you think of a market making higher highs like the US dollar, higher lows, higher highs, of course it's not, that number is going to start to look, less it looks like it's going to be reducing in its strength, right? On this pullback, but it's just a pullback. That's it. It's a retracement after an impulsive move. So yes, we can get a bit of an improvement one week, and then uh, like the U.S. dollar, and then hit another note where we come down. We're still in a more complex correction, right? But it doesn't mean that the overall uptrend is over. We can still turn around and continue and resume the bullish trend. That's all I'm saying. I hope you get that analogy, right? So Euro, we're gonna watch this number. It got a little stronger here. All right, it got a little stronger here. Actually, what am I talking about? Uh, from minus 330 to minus 133. That's where we saw the strength. But then we saw it come down a little bit, minus 250. Right. This is something to be aware of. We got to see what this euro is, because this one is this one I want to put some emphasis on the euro, especially euro USD. All right, look at the Swiss. All right, it was ranked number 2 on the 21st, minus 213. What did it go to? Minus 178. Got a little stronger, right? Even though it came down in the ranking, it did get a little stronger. And then where are we at now? Minus 305. It's coming down. This is exactly what you'll see. You'll see this theme throughout this ranking, that it's the exact opposite what I gave last time. The US dollar, which was the strongest, was trending down, while these all the 1, 2 to 8 were trending up. All right, looked like they were getting stronger, and I said this looks like a corrective period. I believe that we are still in that corrective period, but the story is reversed. The US dollar increased in strength just by the numbers. All right, technically, it increased in strength by the numbers, and the euro to the yen from 2 to 8 started to trend down. You'll see that with the CAD. CAD last week was minus 417. This week, minus 405. Kind of a lateral sideways move. Bear in mind, it came from minus 503. It was trending up, you know, 3 weeks ago, right? NZD, look, minus 476 this week. Last week, it was at minus 556. Now that's very interesting, isn't it? See some strength coming into the New Zealand dollar, and this we have a bit of an exception here. Look at the Aussie. Actually, let's look at the pound. 511 this week, minus 206. Now that is a pretty significant move to the downside. A pretty significant uh, loss of strength. And you got to think about what's going on there, what's how the economy is doing, how they are doing politically, and everything. And you'll see. We'll take a closer look at the actual chart. Okay. And I appreciate that, Leslie. Thank you. Do remember to smash that like button. Okay. Uh, let's see. Where are we at? We did pound Aussie. Look at Aussie last week, minus 551. This week is minus 625. Now, why? It's closely related as the New Zealand dollar and Aussie dollar. One is kind of trending up. All right, New Zealand dollar minus 556 this week. Last week, and minus 476 this week. Right, the Aussie minus 551 last week, and this week is minus 625. All right, now that one is definitely one I want to take a good look at. So I'm going to. And the yen, minus 597 last week, minus 715. Look at it from the 21st, minus 744. Then it went to minus 597. And now we're back to minus 715. This is I want to put the strong against the weak, right? And I don't want to short against the US dollar. So I need some more information. So what am I going to do? I'm going to the charts. Let's start with the Dixie. This is the most important. This one I'm going to spend a little time on, and then we'll run through the others. All right. What we want to see is Hey, Frank, good to see you. All right. Uh, what do we? I want to show you something first. Let's look at the COT report. All right. As of the latest COT report from the 1st of November, 77% of banking institutions are long. 77%. All right. Now, we've come from the summertime where it was at 82, and it's, you can see that we went to 80, 79, got down as low as 72. Now we're starting to build back up: 74, 78, 79, 75, 77. All right. So they're still long, right? They've closed 2,600 long positions, and they also closed 2,300 short positions. All right. So the majority is still being long, and the increase from the last report a week ago. That's where I find my significance. That's where I find some value looking at that COP report. Now, what do we? What do I want you to see here? All right, I have a green arrow here because this is a very strong uptrend. We are breaking structure to the upside. All right, we have not broken those structures to the downside, not yet. Yes, we did get a low broken here. All right, and if you look at it, this is right here. This is a weekly demand zone. That's a weekly demand zone there, and we had a great response. However, we took that low. Right, last week we closed with a very, it's a bullish candle, but it is a very bearish looking one, isn't it? All right, with the sellers looking like they got really a good handle, smashing down that bullish rise. All right, and this is the result of the NFP. All right, and what did price do? We ran up into a monthly and weekly supply zone, right? And price, reacted to it, right? We did have a bullish response initially, and then we had uh, this bearish uh, this bearish move, 2 candles, 2 weeks of bearish movement, right? And then another push back up and down. This candle here is a bit indecisive to me. All right, look at the range. Look at the range. On the weekly, we you can see that we still have a very bullish trend that's still intact. But on the daily, this is what we're gonna. I want to bring your notice to. This is the last correction and impulse. All right, and we are in this bullish leg of structure. Yes, price did do its dance. It failed to break that high. We broke market structure to the downside here. All right. Price had a bullish response. All right. This week, but the devil's in the detail. Let me show you what I mean. This is how the week opened right here. Come on, man. This is how the week opened right here. All right. This is how the week ended right here. A big nothing. All right. A big old sideways move. That's what we did. So I'm not fooled by this. One thing I walk away from this with, the takeaway of this is we did nothing. All right. Price is in this range. All right. And we got a very bearish engulfer here. All right. And you would think we're gonna see some more continuation of that downward movement, but we are in discount of this range as opposed to premium. This is where I'm expecting price to find its footing. All right, we are driving into this demand zone, which we've already mitigated. All right, and price is coming back down in here, and this is the last zone of support. You understand? But we're still within this range. You understand? That's what I'm looking at. Now, if price comes down and sweeps this low, which would be here, it would make sense. It would make sense. This is ICS. All right, I want to show you something. I'm going to show you on a different chart. All right, if price comes down here and sweeps this low, these are relative equal lows. I believe price may want some of that. All right, this is a lot of liquidity. All right, there's a lot of liquidity, but I don't believe that price that the Dixie is going to turn bearish. I do not. All right, a break of this low is where that concern. Once we get a break and close below this low, that's when I know price that we have turned bearish. That's it. All right. This is a significant structure point here, a higher low, if you will. Once you break that higher low, that is a break of a bearish break of structure. All right, not just a change of character, not just that's not insignificant. We are in demand. I'm looking for price to come here, and I'm going to see if we get that bullish price action right here. All right. If we don't, if price continues bearishly, then I'm looking for price to take those lows and mitigate this unmitigated zone of demand. All right. Now, this is what can happen. Thursday is CPI. All right. See, it's going to either be of two scenarios. One, when price opens up later on today, this evening, we're going to see price drift up towards this the base candle of this bearish engulfer pattern. All right. And we may see price drop come CPI. You understand? We may get a couple of days of this up and price drop on CPI because maybe the CPI data doesn't come in hot. Okay, maybe it doesn't come in hot, and the risk the markets may turn to a risk on environment. Okay. The other scenario is which is what the one that I'm leaning towards expecting is that price that the CPI data does come in a bit hot, and that we may see price continue down into the middle, into the extreme of this zone. And we find on CPI data, once CPI data comes, we're up. Easy. All right. Do I want you, would I recommend shorting the US dollar? Would I recommend shorting the US dollar? I do not, because the higher time frames are showing that it's still bullish. All right. When we have a significant break of structure to the downside, I think that'll be the way to look. If price drifts back up here, this is where I would look for bearish price action. All right. But right here, no, not here. I wouldn't be looking for shorts there. I'd wait for a pullback to a significant zone of supply before I start looking for shorting against the Dixie. All right, I am bullish on the Dixie. I am. I'm going to wait, and I recommend that you wait until CPI data comes out before you start taking hardcore kind of swing positions. Stick to the intraday trades. One minute charts to 15-minute charts is what I would recommend until CPI data comes out. I hope that is clear. Leslie, let me know if I was clear. If I was confusing, let me know. You, I trust your judgment. Let me know if I was confusing at all. I'm looking at the possibilities here, but I'm giving you what my bias is, and I'm making the recommendations to that taking sells is maybe not the best course of action. I would kind of caution you against taking sells until it's at a significant point of supply. All right. But I'm looking for this zone here to hold or fold. If it folds, we have these what do you call the relative equal lows here, and we may catch that bullish price action right there. Thank you very much, Leslie. All right. So let's see how it does when it gets here, because I feel that it will. We may get a gap opening. We may get a gap opening. It may start here and start bearing down. I would, I would be looking for shorter term trades from there. All right, shorter term sells against the dollar if it once it reaches a significant supply zone. Let's look at the euro. All right, on the euro, now we can run through some things. All right, on the euro, what can we see? One, two, three, four, five. This is how the market opened. Very bearish. Then we got the news, and if FOMC took price down, NFP took price back up. We ended up back where we started again, just like the inverse of the Dixie, right? But where are we? We're coming towards this supply zone right here, right? And where are we in structure? There's a high and a low in the middle of every trading range. That would be here. That would be here. We are in premium price. Price went to discount and we were back in premium. I'm looking for price to round over up here. And I'm looking for that to happen by CPI. All right. I'm looking for that to happen by CPI Thursday. You understand? Let's see how price does at the middle of this here. I do not think, price may challenge this high. All right. But it's this high, just like on the Dixie, that low I circled. This high is the one that makes all the difference. We get a break and close above that, then I'm looking for bullish. I'm looking to buy the euro. I'm looking to buy the euro. Do you understand? All right. Until that happens, we are still bearish. We're in a bearish leg of structure. I'm looking for bearish setups. I'm looking for those bearish setups to happen in premium price of this trading range. So that's it. That's what I'm looking at. I got an eye on this one. All right. Does that make sense? All right. I'm gonna move on. Let's look at the Swiss franc. Swiss franc is very confusing. I'm telling you right now. I'm not. It's just confusing. Why? Look at the chop. Look at this chop. It's been chopping for a couple of weeks now. It's ridiculous. All right. And this is at a low, a very pivotal low, because this is the swing low. All right. The swing low of every downtrend is weak inherently. All right. And you expect it to get ran. You expect it to get run. Right. This one did. We did. It did run. It did take that low. All right. And we did get a daily break and close below it. All right. But after a break of structure, what do you expect? A pullback or a return to impulse. This impulse came with NFP, right? And we are heading towards this supply here. All right. So I want to see, what I can imagining happen is that the Swiss will sweep those highs. All right. And once we sweep these highs, I'm looking to see if price will round over, if it will respect that high. That's what I'm looking at. All right. If it breaks this high, that would be an internal break of structure, and we can start looking to buy the Swiss. We can start looking to buy the Swiss. Remember where it's at. It's ranked number 3. Last week it was at minus 178. This week is at minus 305. Okay. And that's one thing. That's one aspect. Let's look at this. The COT report. 76% of banking institutions are short against the Swiss. Short the Swiss franc. All right. They added 1,000 long positions and added even more 4,500 short positions. They are short. Let's look at what they've been doing since the 18th. Added to 2,700, added 2,700 more, added 4,500 more short positions. Do you understand? Does this give you an indication of the intent of the 76% majority that is short on this this currency? Maybe it gives a hint. So I am looking for price to turn around here. All right, to maybe round over after sweeping some highs and maybe mitigating the midpoint of this zone. We're going to see how price reacts. All right, but it's choppy, and I would suggest avoiding this until we get some clarity here. Now, this is the Swiss is a safe haven currency. Okay, so bear that in mind when we get the CPI data. All right, being that if the euro, I mean if the U.S. dollar benefits in strength from that CPI data, you can probably you know look for similar price action for the Swiss, similar strength against commodity pairs, against riskier assets. Uh, uh, so just bear that in mind. But I'm looking to avoid this. This is some chop slop, and I don't like chop slop. All right, because that's indecisive to me. All right, let's go to the the British pound, and I'm going to look at the COT report. Why does that say the fourth? Because it wasn't the fourth. I got to get my staff. I got to get my staff under control. I got a large staff, a large payroll. No, I don't. It's just me. Okay, so the 70% of the banking institutions are short, right? They closed their long positions, 8,500 of them. They've also closed 11,500 short positions. What has it been doing up until this time? Let's see how it's been doing. It's closed 17,000, added 6, closed 8, added 3, closed 8. Kind of a it doesn't reveal very much. Doesn't reveal very much. All right, they've added large position sizes uh, at the same time on both sides of the fence. So this isn't telling us so much other than that the 70% are still short in this currency. All right, and what I want to point out here is the last swing structure that was broken. This low was here, right? And we had a blip here and then down. All right, and where are we in this structure? Where are we now? We're above the equilibrium. All right, we came into premium price. This is where we would be looking for shorts. Price came up to that supply, and all right, price came a little delayed. All right, price came up into that supply and chopped our way up, and it is respecting this unmitigated zone of supply, and it actually led to some short-term lows being broken, right? But we want to see, I want to see this low broken here, because a break and close below that low is going to tell me that price is probably, there's a high probability that price is going to continue lower. This one would confirm it for me. All right. Um, but this one was significant. Once we had a break and close below that, I'm looking for a return to impulse, and I suspect up until CPI, uh, when the U.S. Gets a hold of things, all right, I expect price to come up a little bit. And I want to make sure I emphasize that point, that I believe that we may see this until uh, we may see that drift. All right, I believe we may see some weakness, some short term weakness in the U.S. dollar until CPI. All right, we may see a drift, but that is going to take us down to this low and into this demand. And I believe this is where price, if we're here timing wise, Thursday, I'm looking for that to turn around. So in the meantime, its counterparts, like the British pound, we may see that short-term weakness reflected against the U.S. dollar. We may see that the strength, short-term strength in the pound up until that point, and then come CPI, we may see all this sell-side liquidity get taken. Now, I want to recognize. Uh oh, went too far. I want to recognize that uh, we did have a significant uh, higher high, higher low, higher high kind of situation there. The internal structure is bullish, but we turned here, turned a good corner, okay, and that this low here, this that low being broken here, I'm looking to see if we see some follow through with that. So, uh, uh, with this return to impulse, we're coming up back into supply here. Oh, this is driving me crazy. Uh, we're coming back up into supply here, and I want to see how price, what price forms on the lower time frames, so to indicate that it will continue lower, and I believe that's going to happen. All right, if we break this high, if we break this high, that would be significant. A break and close above that high would allow me to start to think to take buys with the U.S. I mean with the pound. You understand? But I'm not there. I'm not there yet. We have the unmitigated zone being checked, being tested. We mitigated a pullback, and then further downside is what I'm thinking is going to happen. Let's move on. Canadian dollar futures. All right, Canadian dollar futures. Let's take a look at the COT report. The Canadian dollar interests me again with this report. Who? I got somebody's going to. I got to fire somebody. I got to fire somebody on the staff. All right. So I want you to notice that these numbers, 59% of the banking institutions are short on the Canadian dollar. But you want to see what has it been doing in the last since over the last few reports. 64% was a high, right? And that was on the 11th of October. And since then, the number is coming down, coming down, coming down. All right. We've added 2,900 weave. They added 2,900 long positions, added 2,400 short positions. That doesn't tell you much, right? What has it been doing? All right, let me see. Let's come down here. We had 14,000 long positions closed on the 27th of September. 14,000 closed, taking profit, and then added two, took away three, closed three, added three more really, and uh, added added more since over 3,000, right? So what is are we taking advantage of this move? I want to show you something. There is an unmitigated zone of supply up here. I think price is trying to reach that supply. Look at Canada, the Canadian dollar. What we have here is an inverted head and shoulders, and we have a break and close above the neckline. I'm thinking that we're going to see some follow through. Okay, and this could come up. This could come up and test these lows where the last swing low was broken. You understand? So I'm looking to buy Canadian dollar. This one, actually, the numbers showing that Canadian dollar was at minus 503, then it went to minus 417, and then now it's at minus 405. It's steadily, it's kind of moving sideways, but it's steadily gaining, holding its strength, even though it's kind of moving like neutral, bullish neutral. All right, this is an inverted head and shoulders, so you can expect that kind of fluctuation of those numbers. All right, where you see the numbers go up and then it comes back down and then it goes back up. You understand? So I'm looking for some follow through here, and I think that makes sense just because of the pattern of uh, relative strength and weakness there. So I'm looking to definitely look into some Canadian dollar, put it against the weaker currencies. All right, and we'll take a look at that. All right, let's look at the Aussie dollar. All right, you guys, are you with me? Everybody's still. Uh, am I clear so far? I'm giving a COT report. I'm giving the my bias. I'm making sure to tell you what I'm looking for and what I'm expecting. And I want to make sure that we emphasize the point that CPI data is coming. All right, that CPI data is coming, and that could be one of those that kind of the kind of report that can reverse markets. All right. So I want to make sure that I'm checking in clear. My voice is clear. Everybody's all right. I don't want to lose nobody. All right. Thank you, T. Thank you very much. All right. Hey, uh, Gore, Gore Shokivari, forgive me, man. Gore, Gor. Thank you. All right. You said something in Russian, and I'm not sure what that is. I'm not that good in Russian, but thank you, Gore. Gorshkov. Gorshk, Gorshkov. All right. Uh, thank you, Leslie. And I'm in and out, but I'm rewatching later. All right, I got you, Lockron. I got you, man. Praz, thank you very much. Glad to see you here, by the way. All right, so I want to make sure everybody's on board. Let me take a sip. Let me take a swig. Mm. My man over here says something to me in Russian, copy, and I want to make sure somebody can tell me what that means. There you go. I just put it in the chat. I don't want to waste too much time. Just trying to get some water in and get my voice a hot minute to get together. Oh, okay. Hold on. Okay. Gores, I'm not sure. If you don't want to be here, you can go on your way, man. I just found out what he was trying to say. Uh, you can be on your way. All right. Thank you. All right. So let's move on. Now, I want to go to New Zealand dollar. New Zealand dollar is also one I'm interested in. You see that red arrow there, and you can see price is kind of we have a swing low being broken. We have price moving down. We have this move up from this low, right? A lower low being made, and then up. We have an internal break of structure. So buys in this market are permitted. Buying the New Zealand dollar is permitted. You see this bullish engulfing candle here. All right, That's on the same day of the NFP, right? So let's take a look at the COT report. Is 54% of banking institutions are short. They added 5,400 long positions and closed 3,500 shorts. This isn't as telling, but look at these numbers though. Look how they fluctuated: 72%, 74%, 65%. Now we're at 54. Wow, you understand? That's a big leap. That's a big jump. It looks like they're adding to long positions, right? And the majority is looking for this to come up. And I'm thinking it's the same way. All right, look at this fair value gap. All right, look at this unmitigated zone of supply. I think we're heading right here. All right, and I think that if you're going to look to a stronger currency, this one is trending up. You understand? I hope that's clear. All right, I'm going to move on. All right, uh, buys are permitted with NZD. What about the yen? All right, the COT report says that 75%, 74% of banking institutions are short. They added 2,800 long positions and closed 22,000 short positions. They took a lot of profit on that long time uh, short positions, those long time short positions, right? And the fact is that swing low was broken, and we are far away from uh, an internal break of a bullish internal break of structure. We have a bullish candle here, but the yen is not something I would recommend buying. We haven't had an internal break of structure here. We the last one, the last swing low that was broken, the last break of structure was a swing low, meaning that we are in a bearish leg of structure. All right, and we got a lot of chop to the side. All right, and if you remember, it's minus 17, minus 715, right? It's one of the weakest, and it's been the weakest for a few weeks now. Minus 744 on the 21st, minus 597 on the 28th, and now on the 4th, as of the 4th, it's at minus 715 again. So I'm not recommending buying the yen. I'm not recommending this market, except against the very strongest of the currencies. All right, but I'm still selling. I'm still bearish on the yen, and I wouldn't recommend buys. Just looking at that. All right, does that make sense to everybody? I hope it does. Okay. Um, Now I want to get to the actual currencies. All right, but wait. I want you to take a look at gold and oil. Gold and oil. All right. I'm looking at the futures, but you can see what I mean in the matter of fact, if I get to the oil, let me see. Let me see. Hold on a second. Hold on a second. Let me make sure if I did some if I left some marks. Yeah. Okay. Yeah. I'll come to it. We'll just go down the list. Okay. Very good. We'll start with gold. Gold. All right. We'll start with gold. Uh, Everybody's with me, right? I'm gonna run through these. What time is it now? It's 11:48. Wow. I had no idea I've been on it this long. Wow. Jingle bells, man. All right. Give me 2 seconds. Let me I'll be right back. Hold on. And I am back. All right. All right. Guys, do not forget to smash that like button. All right. You like what I'm putting down? Make sure that let me see. Let me see. Boom. Let me see. Let me see what we got here. Okay. Checking in with everybody. Listen, I want to make sure you understand something. I'm going to go through these pairs. These are the ones I think uh, may set up pretty well for the week. All right. I'm getting ready to go over gold, oil, Euro USD, Pound USD, USD CAD, Aussie USD, NZD USD, Pound Yen, Aussie CAD, Pound CAD. Got it? Good. All right. If you have a pair or something that you want me to check out, fine. If you want me to check out one of your own charts, make sure you just pop a link in there, and I'll see if I can pull it up. All right. Pull it up, and we'll just take a look at it or whatever, and that'll be great. All right. But we'll save that until after I do go through these pairs. All right. I'm going to run. I'm going to run through them. All right. Let me start on the 4 hour. Okay, with gold, let's start with gold. Hey, and don't make sure you understand, especially for guys like Lachlan. All right, that I'm going to make sure I put some what do you call those things? Time stamps I'm going to timestamp the YouTube video, okay? And I'll put the timestamps in. I'll put the timestamps in after it publishes in. I'll put it in the comment section, okay? All right. Now let's look at gold. What has gold done? Let's take a look at the daily. All right. Let's take a peek at the daily first. We don't need a big old green dot there for no reason. All right. So I didn't mark it, but we have structure, swing structure being broken to the downside. And we are in this leg of structure here. Easy to see, right? So we are bearish. We are bearish. This is a bearish doggone market. Lower lows, lower highs, lower lows, lower highs, lower lows. Got it? Now, where are we now? 1, 2, 3, 4, 5. Price opened bearishly, right? And then popped up above. Did it turn bullish? Is the market bullish now? Is it okay to look for buys right now? I would be very careful. All right. I'd be very careful looking for buys, especially with the open. It'll be more clear Monday, probably around the end of the day. But what I would tell you is what price did on with this NFP move, correcting that the down move for FOMC. The price came all the way back up, right? And I expect price to quite possibly uh, continue higher, but I want you to see how it will continue higher. I want you to get an idea of what to look for. All right. Why would it come up here? One, there is relative equal highs over here. Very close. I believe we take that liquidity. All right. Why take that liquidity? Because I think we're on our way to mitigate the higher zones. All right. There is a zone here, not the most high probability area here. All right. All right. But there is a zone here. I have it lightly marked there. But up here, a more substantial supply zone. This one is a supply, but it is supply, and we have an inducement point right above it. So I believe that there's a chance that price comes up there. You see my eye, right? Uh, Once price meets this area, and this area is at 1693.96. All right, 1693.96. All right, I'm going to watch out for bearish price action. I'm going to look for a break of market structure and a confirmation entry, a confirmation that price is turning back bearish here. All right. We haven't turned bullish here. It's not the best time to look for longs. All right. Wait until price shows that it wants to go long. Now there is a breaker here, right? And price may pull back for the open, and we may get some bullish price action here. All right, that will signal price wants to go longer. This is safer to me. All right, there's a zone here, a demand zone that price could pull back to, and then go higher for the higher mitigation. If this happens, and we're up around here during CPI data, expect price to pull down as the U.S. dollar may catch a hot CPI bit of news and go higher. All right. Smash the like button if you like if you're picking up what I'm putting down. Smash that like button, okay? Uh, uh, but I believe that we may see some more follow through to take that and mitigate here or here, right? Up in this area. And if we're there on Thursday, uh, look for bearish price action to give you a confirmation entry for a short. Look for that confirmation on the 15-minute. All right. Here, if price comes back to here or here, look for 15-minute confirmation on the look on the 15-minute time frame for confirmation entries to take long positions. But I would not take a change of character entry. I would take um, a 15-minute break of market structure, a break of structure. Okay, that's what I would wait for. This one is a little more high probability than here, in my opinion. So any pullback will be seen as an opportunity to take a more high probability trade to the upside. I wouldn't take it. I wouldn't take buys from here. Okay, wait till it pulls back and then let it go higher. But I believe that we're going to see some as the dollar shows near term weakness, we're going to see near term strength here and in the indices, in my opinion. Let's move on. Let's go to oil. All right, oil, very simple. I've been bullish. I've been bullish on oil. Been preaching it since it was here. I was waiting when it was up here. I was saying if price hits here, this demand zone, take this and hold it. You should still be in the trade if you had the cojones, right? Uh, I took my profit too, so I didn't have it, right? And but I re-entered, got out, re-entered. This is I thought the beginning of a a longer term hold. But getting back to what's what's important today, the relevant, this current price action. Price is pushing hard. We have an impulse to the upside. Whenever you see these longs, whenever you see that bullish impulse, you got to think a correction is coming, right? And you have to also think what would be the catalyst to bring that price back to correct that impulsive move. You have to think that. All right. You guys with me? Are you with me on that? I hope so. Um, Now, I have a demand zone down here, all right, that is unmitigated. That price, I would be very happy to take a buy from here. If we see price come back here, I would be very happy to see a buy from here. I believe that's a high probability area. All right, price may looks like it wants to take that high, right, and that's right before a mitigation of a zone. So if price does take this high, I'm looking for that pullback. This could be the catalyst. All right. Once you get a sweep of liquidity, you expect some kind of pullback. And this, after a mitigation, yeah. We, that look once price reaches up here. Once price reaches up there, look for a 15-minute confirmation of bearish price action. Look for that 15-minute price action, like so. All right. This is your confirmation here for sells. All right. Look for an internal break of market structure to the downside. Then sells are on. All right. But for now, it's buys. Look for those buys. Look for those buys. If price pulls back, look at it as an opportunity to get in. Thank you, T. Thank you. Look for an opportunity there to get in. All right. Let's look at Euro USD. Let's get to the FX pairs. All right. Okay. Uh, what do we see? It's a bearish market. Is it not? Or is it bullish? Tell me. You tell me. Is it bearish or bullish? I'm telling you right now. I can't wait. I've been on this too long. It's almost 12 o'clock. Been on this almost an hour. All right. I want to get through this. Okay. So put your answer in the chat if you like. All right, because there's a delay and I can't keep waiting. All right. So what do we see? We see price breaking swing structure to the downside, right? Breaking that swing structure. Boom. All right. Once we broke that swing structure, we are bearish. Easy. We're not bullish until this high is broken, just like I showed you earlier in the individual futures, right? Until this high is broken, we are still bearish. Price has a complex correction here. Okay. Thank you, Mehi. Mehi, thank you. Glad to see you here. All right. Yeah, we are bearish. There is no doubt. All right. But we have internally, we have higher highs and higher lows being made. All right, 4 hour price action to the upside. This is the swing structure is bearish. The internal structure is bullish. Why is it bullish? Because you have to understand that in a lower low, lower high, lower low, lower high, what do we have? We have a downtrend. And every downtrend, you have to make a an impulsive move to the downside, right? That breaks the swing structure, like here, right? What are we going up for? What is the purpose? To make another lower high. That's it. All right. It may chop its way up, whatever. But then it makes a lower high, and then you're waiting for a price to take out that weak low, which is inherent in all downtrends. Simple as that. All right. You're just looking. Thank you, Mehi. Glad to be here and watch you and how you analyze the market. Right. Thank you, man. Uh, let's see. So we are in this bearish leg of structure here. All right. Let's just dot it like so. Right. We have a complex pullback. Price did pull back nicely. Did not break the low. Did not break this low. Right. So if the low is not broken, then you're worried about the high. Price takes that high out. Why? Because that's a weak high. The only job of a high is to create a new low. The only job of a low is to create a new high. If it fails to do that job, it becomes liquidated. It becomes a target for liquidation. And that's what happened here. All right. So we have an internal break of structure to the upside. Is this the lower high? Could this be the lower high? It could be. Price is heading back up here on the daily. All right. Price is heading back up here. We can sweep this high, sweep that high, and mitigate this supply zone up here. All right. We're going to see if that supply is going to hold. I am looking for price to round over. I am looking for price to round over. You heard me. You heard me. Right? Look at that high. We're very close to it. I believe we're going to liquidate that high. And we're going to see price drift up. And if we're still here, maybe we take this high and we come up to the high, the one that would tell us if we break and close above that one, the Euro USD is a bullish market. All right, the downtrend is over. That's what this one would mean. All right, that's the swing high. If we break that swing high, we're looking to buy Euro USD. Period. But up until that point, we're bearish, and if we're still drifting here, if we come up to the midpoint, I'm looking on the 15-minute for a bearish price action and a confirmation for entries to the downside. Okay, I'm looking for sells. Do I recommend buying the Euro USD? I do not. I do not. Yeah, we had a lovely bullish move here, but just remember, how did the market open? 1, 2, 3, 4, 5. Market opened bearish, and we came right. We opened here. We ended up right back here. All right, a move here, and we get that bearish price action. That's what I'll be looking for, to sweep those lows, sweep this low, sweep this low. This is the week short, the week low of the downtrend. All right, and that's what I'm looking for. Now, what makes me think that this one is vulnerable is because it has yet to take out the low that is responsible for it. All right, so price broke market structure here. Right, this becomes a strong internal low. The price came back and tested it, and it held. All right, so if I'm not going to be surprised if we take that high and we mitigate here, and then we round over. So just keep your head on a swivel here. We're going to look for confirmations for everything. Do I recommend taking longs in the Euro USD? Stick to the 1 minute to 15 minute. All right, and be careful with it. We are in an extended market. This was a very impulsive move. All right, I wouldn't be taking any longs until after a pullback. I want to see a flag of some kind before I take a long. I want to take that long here. I don't want to take longs here. It's too far up in this leg. All right. If it comes down here, I'll be happy. I'll be happy with uh, uh, 15-minute confirmations to the upside. Yeah, I would. I'll consider taking a long position. But shorts are what I'll be looking for, and I'll be looking for confirmations for those shorts on the 15-minute, like so, right? And if I don't get it here, I'm going to be looking for it up here. All right, because maybe price wants to sweep this high into this supply. Hope that's clear. I'm looking for shorts because it's a bearish market. That's it. That's all there is to it. And there's good reason for price to come down here and sweep this liquidity. It's built it up for some reason. You understand? So that's what I'm going to be looking for. Check out. Just keep in mind, CPI is coming. CPI is coming. Let me see what we got here. Core inflation rate, la la la. All right, there you go. GDP and all that good stuff. All right, that's British stuff. There's a lot of news coming for the on the 11th of November. There's a lot of news coming for the GDP. Okay, let me see what we got there. Michigan Consumer. That's Friday. All right, so just bear these things in mind. All right, 8:30 on the 10th. Just keep it in mind. 8:30 on the 10th. All right, so what are we looking at? Pound. If we look on the daily, you see that we are very bearish, right? We're breaking market structure to the downside. This is the last break of swing structure. This, for me, is one leg of structure. That this little area, notwithstanding, that is one leg of structure to me. We are still in a bearish leg, all right, and prices moved up to the equilibrium right about here. All right, we've mitigated that zone. That's great. All right, that's very telling. All right, but on the 4 hour, this means more. Let me show you what I mean. All right, we have a swing here, swing up and then down. Great. Price is breaking uh, internal breaks of market structure to the upside, so it's okay to look for buys. All right, it's okay to look for buys. Overall, the trend is bearish, but when you have internal breaks of structure, you can take those hints, those clues from market from the PA. All right, but just understand, why is it bullish? Got to make a lower high for that lower low to follow, because it's a bearish trend overall. Got it? So just temper your expectations. Don't take, look at this internal breaking structure, wait for a pullback, and then swing for the fences. No, you don't want to swing for that high. All right, because it's internal. So you have an internal target. You understand? You have an internal target. Now, what do we got over here? Price has pushed down from the mitigation of the daily supply zone. We made lower lows, lower highs, internal. Right? We've come down here. Is this a strong low? Is that a strong low? Look, what did it do? What did it accomplish? All right. Actually broke some market, led to a break of market structure here. So when price comes down here, I expect it to hold. All right. I expect it not to just be, you know, ran through, because it actually had enough strength to break market structure to that to mitigate that daily zone. Right. So it does hold, but do I think it takes that high? No. Let's see what it does once it gets here. All right. Do I recommend taking buys in the pound USD? No, I don't. I do not. We're bearish. We are bearish. We just mitigated a higher time frame zone, and we have internal breaks of short-term lows, right? But this one was a significant change of character for me, and I'm looking for this area to quite possibly be the return to impulse area. I know we might see price turn over here. You see where my eye is, right? I'm looking at this higher zone. We may see a higher mitigation because there is relative equal highs here. And if price takes these highs, it'll take that high as well. And maybe we come up and challenge up here. So this is the possibility, but I do believe that we should see the rounding over here, especially if we're here come Thursday. You understand? I'm looking for a higher probability trade. Taking buys from this area, I think it's permitted. All right, if price pulls back, taking a buy from this area, I think is permitted. The higher probability trades, though, are shorts, in my opinion, because they go with the higher time frame trend. They are pro higher time frame trend trades to the downside. I'm trying to find POIs that I can expect price could potentially turn around in. This is an unmitigated zone here. All right, this is that news candle. All right. This is news time. That should have been on Wednesday. Yes, it is. This is the FOMC, and this is the NFP fallout. All right. So I'm looking to see what we're going to get once we get up here. All right. Looking for higher time frame. I mean, looking for 15-minute confirmations for any shorts. Looking for 15-minute confirmations once price reaches these POIs. All right. Very good. Okay, let's go to the USD CAD. I like the CAD. I told you that earlier. Why? Look at the daily. Uh, guys, do not forget to hit that like button. Do not forget to smash it when you get a chance. All right. Don't be all up in the party. All right. Don't be all up in the party and forget to pay your way in, man. There's a cover tab, man. That's the way you pay. Just hit the like button if you like what I'm putting out. Can you see on USD CAD on the daily what I see? Seems pretty laid out there for us. And we have a very bearish candle here. Very bearish, right? You can see the price action since the open. This is Friday's candles, right? Thursday, Wednesday, Tuesday, Monday, and you can see from here, price just smashed through, took out all of that liquidity. We swept that liquidity, and we are mitigating this demand zone. Is this the strongest demand zone in the world? No, it's not. Of course not. No, I think we're going to get more downside action. This is the neckline, man. This is the neckline of this head and shoulders, and I believe we're going to get some follow through. And we have some zones here that I believe price may want to come down towards. So I am bearish. I am bearish. I think uh, it's not the easiest situation to think about because U.S. dollar may pop, may pop up to the upside in a bit. All right, and we may find that pop happening in this in one of these demand zones. But I believe we're going to see some short term for the shorter term. We're going to see some follow through to the downside on USD CAD because CAD is shows some strength. All right, if you remember what I showed you on the chart on its individual futures on the individual future chart. So maybe price gives us a little drift up, all right, into these areas here. All right, but any pullback, I believe, should be seen as an opportunity to take a short. All right, and maybe price will come to one of these demand zones, especially this one down here because of this structure here, this one here. If we get down here, all right. If we find ourselves in this general area on Thursday, watch out for this, okay? Because this is a safe haven against a commodity pair. All right. If CPI data comes in hot, the commodity pairs will suffer, and the safe havens will benefit. You understand? So right now, that bearish price action, this sweep of liquidity, the CAD is outperforming the US dollar. All right. And I believe we're going to see some follow through. All right. So do you want to take a short right here? No. I'd say look for 15-minute confirmations for your shorts. All right. Look for 15-minute confirmations for your shorts and be careful. All right. Understand that CPI data is coming on Thursday. I hope that is clear. All right. You guys still with me? All right. Uh, Go ahead and let me know in the chat if you agree with that USD CAD breakdown I just gave. All right, I think we're going to see some follow through here, man. If we go to the 4 hour, and I didn't, I want you to see that thank you, T. I want you to see that we swept this low and this one. All right, we swept that low into this demand zone. Let's see, look for price to react in the zone. This is a very impulsive move, right? You got to figure there's going to be some kind of correction. All right. So with that in mind, uh, if you is it what's the word? Is it permitted? Is it permitted? Are buys permitted? Yes, buys are permitted shorter term. All right, short term, 1 to 15 minute buys from this area. If you see 15-minute breaks of market structure to the upside, sure, you can take a buy there. You can take a buy to the sell. But what do I think is uh, more probable, higher probability? Shorts. You understand? Yeah, you can take buys. All right. And there's going to be some kind of reaction here. And this demand zone could kick that, it could be the catalyst for that pullback, but it's only a corrective move. Look for corrective structure. Look for corrective structure. All right. Not that impulsive move. I don't think we're going to see an impulsive move to the upside just yet. Not until CPI. So you could take a riskier trades to the upside, but I'd be looking for that move like that there, that bearish break of market structure for a confirmation trade to take lower. If we see price drift up, we might see a gap on this one. We might see a gap on this one because it just took out a lot of liquidity. So I'm looking for some kind of pullback to happen. All right. If you get in down here, make sure you take confirmations. If you take a buy, that's all. Make sure you take a buy. We have a very nice looking head and shoulders. That's a very bearish pattern. I'd be looking for shorts if I were you. Aussie USD, Aussie USD. All right, T. That's what I'm talking about. That's what I'm talking about. All right. Let's Aussie USD, Aussie USD. I want you to see on the daily, very similar. Can you see this? We're approaching the neckline of an inverted head and shoulders. The catalyst was this weekly demand zone. All right. This move did not, interestingly enough, did not lead to an internal break of market structure yet. So I'm being very careful not to say, hey, we should be looking for buys. It's permitted to look for buys. Being very careful not to say that. But I want you to understand that this looks like an inverted head and shoulders. And price has left a lot of liquidity up here at the neckline. Good reason to think we may see some follow through to this unmitigated zone of supply. That's why my eye is here. So, should you be taking buys? This is where you have to be very clear with your eyes. This is a demand zone that was created, right? If price takes out this high, sweeps that high, and pulls back, this is a pretty decently high probability trade to the upside. All right, especially if this happens around Thursday. All right, because it's against the U.S. dollar, and the U.S. dollar could find its strength there. There's an unmitigated zone. There's a fair value gap to come and fill. But I want this demand zone to have accomplished something. If it takes out this supply and comes back to it, yeah, this is that becomes higher probability in my opinion. I hope you understand it. Boom, boom. That's easy because this is an unmitigated zone. If price hits this zone, if price mitigates that zone before coming back here, then it becomes less probable. Less probable. It's not as high a probability, in my opinion. All right, because this zone here may want to torpedo that low. So I just be careful of that. But let's get there. Let's get there first before we start worrying about this. All right. I'm looking for price to continue higher. If we pull back and then go back up, that'd be great. I want to see that's I want to see supply getting taken out. I love to see supply removed before I take buys. All right. This is a very impulsive move, right? Very impulsive. And we are mitigating a zone. Sweep that high will give good reason for price to come back for that pullback into an area where price has not mitigated. All right. There's another one here, and that could happen here. All right. And then we can go up and mitigate. So there are buys, I believe, that are permitted in this situation, but only after a pullback to them. All right. Don't take your buy here. I wouldn't suggest taking a buy here because we are mitigating a zone of supply, and that could force price down just by the laws of supply and demand. Okay. All right. Until this supply is taken out, I wouldn't suggest taking a buy from here. Let it take out that zone and return to impulse. Let's see if there's supply demand waiting here. All right. Whatever demand that took out this supply is the one I want to take a buy from. All right. If price opens up later on today and plays around up here, I'm waiting for that pullback. I'm waiting for that pullback. Do you want to take a short from here? Do you want to take a short from here? This is a weak high. Why? Because it didn't break this low. This, I believe this is going to be a target for liquidity because it didn't break the low. So if it pulls back, I want to take that. I want to take that ride to break that. You understand that logic? I hope you do. This is an inverted head and shoulders forming. So I want to see. I would like to see price follow through. We'll see. We'll see because this is U.S. dollar. All right, this is U.S. dollar against that Aussie dollar. All right, and I want to be careful with any longer term views. The Aussie is at minus 625. It was at minus 551 prior to that, and minus 700 before that. Okay, so there is a little bit of an uptrend, right? A little bit, but we have CPI data coming. All right, and if we're messing around up here in this zone come Thursday, I want to take that short. All right. I want to take that short. I want to get a 15-minute confirmation up here. We're probably going to take this liquidity first. I want a 15-minute confirmation up here. If we're still up here for the on Thursday, if price continues higher and takes this high, and we mitigate up here, I'm definitely looking for a 15-minute short. I'm definitely looking for a 15-minute short, especially if we're here around Thursday. Yeah, I'm looking for the confirmation first, though. Confirmation first. Always confirmation, man. Always confirmation. Okay? So let's look for confirmation here or confirmation here on on the 15-minute if we're going to look for shorts. If you're going to take shorts. This is an impulse that has to that you figure it's going to be corrected. takes liquidity. We may come back down here. Do I recommend taking buys? I'm saying buys are permitted, but I'm thinking the higher time frame, the trend is down, and I want to be pro trend, and those are the higher probability trades. I hope that's understood. I want to make sure I make that crystal clear. Let's look at NZDUSD. Look what time it is, 12:26. NZDUSD. All right. If we just take a peek at the daily, I'm spending too much time on these things. All right. You can see that on the daily, we're breaking swing structure to the downside. Easy, right? Easy to see. Bearish. All right. This is a bearish leg of structure. We had a bullish break of market structure to the upside, internal break of structure. This is an IBOS. All right. That means buys are permitted. Buys are permitted. What are the highest probability trades? Sells. But buys are permitted when the internal structure turns bullish. All right. So we understand, like I went over a couple of times today, that when the internal structure turns bullish, it's to do what? What is the purpose? The expectation is a lower high will be made in premium, the premium area of that of this late that the prevalent trading range. All right, and that's we're on our way from discount here in this below the 50%. We're on our way from discount to premium. So the expectation is the lower high is going to be made. This is going to be an area that I'm going to look for a high probability trade to the downside. All right, if we're reaching here by Thursday, I'm looking for that high probability trade to the downside. You understand? Buys are permitted. So if you're going to take a buy, to buy up to the sell, like I just went over with Aussie dollar, wait for the pullback. We're going to take that high. We're going to take this high for liquidity. And chances are we're going to see some follow through. All right. Chances are we're going to see some follow through with this bullish price action. Wait till price pulls back. All right. Look for the demand zones that are formed. All right. There'll be, we may get it here because there's some, what do you call it, momentum to the upside. So we may get it here. All right. Just wait for that pullback and look for 15-minute confirmations to the bullish price action. We want to see a break of structure on the 15-minute to the upside and a pullback. You take that pullback and you should be good to go. Right now, remember this is a news candle, and you would think there's supply here, and we're slicing right through it. This is what I always tell people: news candles that form demand zones and supply zones I do not trust, and this is case in point. All right. This was Wednesday, right? For non-farm, for FOMC, and this is the Friday move to correct that. And I believe we're going to see some follow through. Look for your high probability trade to the downside up here. All right, and that would make sense. This is the area I would be looking for a lower high to be formed. Does that make sense? So I take you do not look at imbalances for targets. I point out uh, imbalances. I say fair value guys. I say FVG or imbalances or inefficiencies like this one. This is why I like this. This is why I like this zone because there's an imbalance there. All right, and I want part, and it's unmitigated. And the imbalance zone that is unmitigated, that has swept liquidity, there are some certain things that I look for. And if you spend some time with me in the chat, if you go down to the links and you'll see where I hang out in the description, you'll know that I do like to look at imbalances. I do like to look at them, but I don't. Uh, I use that as my criteria to validate supply and demand zones. And when I target, I'll target the actual zone. But part of that zone, part of the validation of that zone is the imbalance. I hope you understand the way I just answered your question. I hope you did. All right, so let's move on to pound yen. Pound yen. Let me show you this. See this here? Mitigation, break of market structure, V shape, imbalance, inducement, flip, liquidity. These are the things I look at when I look at zones of supply and demand. All right, but imbalance. If I don't see the imbalance there, that might break my deal. That might break the whole deal. That's a deal breaker. All right, some things I need to see when I'm looking at those zones. Now let's go back to pound yen. All right, what do I see on pound yen on the daily? You can see it's kind of been sideways, and then we had this rupture, right? Price breaks down, sweeps all this liquidity down here, right? And then we see that market structure break to the upside. All right. We see that market structure break to the upside. So buys. All right. I'm looking at buys in the pound yen. All right. The pound yen, you can see how the yen has been outperformed by the pound, right? We're talking about a riskier asset next to a safe haven, right? The yen has been pretty much the weakest one for months, the weakest currency for months because of the Bank of Japan's policy of buying up bonds and just printing money to buy up bonds. They're just buying up bonds to keep their currency devalued, right? Because that's what helps their economy try to get itself together, fighting inflation. They're coming at it from a different angle, and they're justified. Let's not get into that. So what happens is the last since look, this was Friday's candle, Thursday, Wednesday, Tuesday, Monday. We opened bearishly, right? And it looks like the yen was outperforming the pound for the better part of the week. But the last break of market structure was to the upside. We haven't had an internal break to the downside as of yet. But should we see some follow through? We may. But I am looking at this unmitigated zone down here. That if should price come for these relative equal lows for liquidity, I believe that we may see price turn around and continue higher, having the pound continue to outperform the yen. This is what we have internally. The daily swing is higher high, higher low, higher high, breaking that swing high, and I'm looking for the higher low to be formed. All right, in this leg of structure here, if price comes back into the discount area, this is where I'll be looking for a high probability trade to the upside. All right, and there is a fair value gap here, a nice imbalance, and I'm looking for price to come into that zone, sweep, and then continue higher. So we shall see. We shall see. All right. I'm looking for that high probability trade. If you want to take a short down here, you can. I don't recommend it. I don't recommend shorting pound yen until it takes out supply, and we are in supply right now. All right, until it removes that supply and pulls back on the one in 1 minute, 5 minute, 15 minute charts, no higher. Maybe you could take that buy down to this zone. All right, there's some range to come and get it. All right, but short term intraday trades only for shorts. This is the high probability trade to the upside, in my opinion. So that's what I'm looking for. Let's look at Aussie CAD. Aussie CAD. What do we see? Does that make sense, Mehi? Am I saying your name right, Mehi? All right. Everybody with me? Make sure you give me a holler in the chat, okay? And I appreciate you guys being here, by the way, and staying this long. It's 12:35, and we're coming down to the end of my list. Good. All right. So on the Aussie CAD, uh, let's take a look. Oh my goodness, what we got here? Thank you, T. T, you are a trooper, man. Uh, what do we got here? You see the swing lows took a while to get past that, and then we finally got a break and close below it. We had a pullback, respected that high, and then more bearish price action. Another break of the swing low. So I am bearish in this market. Easy, easy. I'm bearish in this market. All right. Praz, my man. Thank you. Thank you. Thank you. T Mehi. All right. All right. Now, so we have a swing low being broken bearishly to the downside. We had a pullback. What are we supposed to be doing? Should be looking for shorts, right? Easy. We should be looking for shorts. So what do we have here? We have that bearish move. All right. This was the Wednesday's candle. That was FOMC. And we have the corrective non-farm payable candle. All right. This is Aussie CAD. All right. Now, this is this Aussie CAD are two commodity based currencies. All right. If you want to be careful with this trade, you want to be careful with this trade. You want to bear in mind uh, the a safe haven like the U.S. dollar, and will may turn this thing may have an effect on this, right? May have because it strengthens safe havens and safe haven currencies if the U.S. dollar finds its strength from a hot CPI data, a hot CPI report. Uh, you might see a reflection of that in against the commodities, the commodity based currencies. And I want to also bring up, let me see, the CAD is ranked number 4, the Aussie is ranked number 7, right? So in the, just with that in mind, I'm looking at where I have a bearish market and I'm bear, I'm pro bears. All right, the CAD should in this scenario, I'm expecting the CAD to continue bearishly. All right, maybe we have this bullish engulfer here, right? But we are at supply, daily supply. Let's take a look at this on the 4-hour. All right. Why do I have that red arrow there? Because I'm, like I just said, I'm pro trend. I'm pro trend. I'm looking to be pro trend. All right. This swing low is weak. All right. And I would think the price is going to turn around at some point, come and take that low and sweep these lows and make the lower low. Is this the lower high? Eh, we're going to find out. We're going to find out. Price did not make a new low here. All right, that didn't make the new low. So this is up for a target. All right, we have some rejection coming from this zone. All right, this supply zone, but this is a zone that was created during the news. All right, and that I don't have a lot of trust in that. This is the deal, though. If it was in a if it was what do you call it? If it was in a vacuum, right? If this wasn't here, I would say, yeah, I don't trust this high. But it responded to this demand, all right? It responded to that demand. Rejected breaking these lows. So if price comes back up here, I'm definitely looking for price to turn over. If I'm looking for those signs. I'm looking for a 15-minute break of market structure here. That's it. All right. Is there a chance that price could push on through? Well, we're having some reaction there already. Of course, there's a chance of it because it didn't break these lows. So this is a weak high. There's a chance that price wants to come up and take that out. But because it broke structure and this was respected, I'm going to look for price to quite possibly come up to the midpoint here, and we're going to see if we get some bearish price action. If price takes that high out, I'm looking for that same situation up here, and I'll look for price to come up to the midpoint of that zone and look for bearish price action. I think the higher probability trade is to the downside. I'm looking for price to turn over. That's it. It's that simple. All right. The CAD is a little stronger than the Aussie dollar, and I don't see a good reason to go against that. All right. So we'll see what price does here. Does that make sense to you? Does that make sense to you, Praz? Does that make sense to you, Mehi? Does that make sense to you, T, Leslie, Lockron, whoever? Does that make sense? It makes sense to me. That's what I'm going to look for anyway. Now, we got one more. Pound CAD. All right. I'm going to look at the 4-hour real quick. Pound CAD. Pound CAD's an interesting one. You see this really? That's a very aggressive candle there, right? When we see price broke internal and structure to the upside, make a higher low. All right. And that was that, the internal turned bullish. All right. That's cool. That's cool. We see that. But look at this long impulsive move. This is the kind of stuff you have to take a hard look at. So clear. Thank you, Praz. All right. You got to take a broader view of this because this can throw you off. Look at how price swung down here. Okay. You're going to play around. All right. You see how price swung around here. Stayed this long down here. Pound CAD. Pushed up. So the pound outperformed the CAD. Price comes back down. All right. Price comes back down into this demand here. And it holds. All right. Tested a couple of times. And then we finally broke down. Am I supposed to be bullish or bearish? You're going right, I'm bearish. All right. This is a very bearish market. This is every candle here is a week. 1 week. Right. So with this swing being broken here, this is a pivotal area of structure. Once you're trading below that, yeah, you're bearish. That's it. Don't complicate anything. Don't overdo it. It's easy to overdo things here in Forex. Too easy, right? All right. So we have a bearish break market structure here. We have a series of lower lows and lower lows and lower highs down to here. But then we had a big old bounce, and we're higher, lower, all the way up. But something significant happens. See that dotted line? Those internal breaks of structure, we were met by the opposite, a bearish internal break of structure. So I am very bearish on this market. Now, after this impulse, I'm looking for that pullback. And I'm looking for a zone that price could go to turn around at. We have some buy to sell wicks here, buy to sell wick here. All right. I'm looking for price to come back into this trading range. You see the top and bottom, the middle, top, bottom. I'm looking for this trading range. I'm looking for price to come from discount into premium, right? This is the equilibrium. I'm looking for price to turn around here. I need a 15-minute break of market structure. All right. Now that's nice. All right. And come around. Remember, this is a risky asset against a commodity-based asset. Okay. All right. Pound is not commodities based. Pound is pretty doggone weak. You see, it was at 628. It went to boosted all the way up to minus 206, and then down, crashing, minus 511. All right. And the CAD has been pretty steady Eddie. All right. Minus 503, minus 417, minus 401, 405. You understand? All right. I like the CAD. I like the CAD in this pairing to the and to take the pound down. All right. So I'm definitely looking for a 15-minute confirmation if price makes it up here. All right. Now, is it okay to look for buys? Again, lower time frames, 1 minute, 5 minute. Look for those buys down there. Look for 15-minute confirmations if you would, if you want to take buys. But I'm looking for sells. The sells, I believe, are the higher time frame. I mean, are the higher probability trades. This one, this zone here is right above equilibrium. I'm looking for a price to come up there and quite possibly give us what we need. There is an imbalance here. All right, and I like an imbalance zone. All right, there's an imbalance above it. I'm going to want everybody to make sure they stay aware of that. Price could take that high out and then come up, and then come down. All right, trading into the imbalance. So let's just be careful and cognizant. I love that word, cognizant. Let's be cognizant of that. All right, buys are a little more a little more riskier, but after every break of market structure, you expect some kind of pullback. All right, that's it. BOS, BOS plus RTI, or return to impulse. We're looking for a price to return to impulse. Now, if it comes all the way up here, it just gives us a better price. That's all. All right. If it makes it through past this one, we're going to wait until price gets here, and we're going to look for those confirmations on the 15-minute or bearish break of market structure. All right. What does that look like? If you don't know, come on, man. All right. If you don't know, I will show you. This is a high, a pullback, a higher high that sweeps that high, a break of that low. You got to have that low broken. That's your key. And then a pullback, a return to impulse. All right. Somewhere in this leg of structure, above that break, at that break and above, you'll find the zone, the supply to take a high probability trade to the downside. That's what you're looking for in the 15 minutes. As soon as it breaks market structure, as soon as it breaks that market structure here, that is your break of market structure on the 15-minute. That's going to give you a confirmation entry on the 15-minute, the lower time frame. Then you look for your entry after it breaks market structure. You wait for that pullback. That's it. All right, I've done with my list. It's now 12:48. I'm gonna give you, we can take a few minutes for any kind of questions or concerns, any kind of request. If you want to look at a particular market or something, you can ask now, and or forever hold your peace. I got you, Mehi. You are welcome. You are welcome. All right. I'm looking, man. I am looking. I went over gold. I also added gold. I also added oil. Yeah. Do you trade gold? Yeah. I'll take a trade. Take a trade in gold every so often. If you're in the chat with me, uh, with the group and everything. If you're not, make sure you go down and check the links in the comment section. I mean, in my description. But if you're in the chat with me, you'll know that I sometimes I'll take a gold trade. I primarily look at Euro USD, and then I'll look at AUD USD, and I'll look at gold. Those are my primary go-tos. Sometimes I'll look at USD CAD and pound USD, but I try not to uh, veer too. I try not to spread myself too thin. All right. I like to keep my eye on the other charts because I'm collecting data along the way, and maybe I might add uh, uh, one one other market into my my scans, so that I can add it to my trading plan. But I collect data first. That's what I do. All right. Each individual market has its own little nuances, its own little quirks. All right. Like pound USD versus pound JPY. You may see longer wicks on JPY. All right. There's things like that, little things that make a difference. You with gold, it doesn't give me my perfect entry model all the time like that. It doesn't. Sometimes it does this, and then goes like that. So, there's little things that I pick up, but you want to back test and forward test. I think those are the only ways to go. The only ways to go: a back test and forward test, to get you to so that you can collect your data. You know, uh, that's my point of view. Any requests? Anybody is looking at anything else? Uh, look at this impulse. Look how strong that impulse is. In gold. Do I have any doubts that it'll sweep that liquidity here? No, I don't. Do I have any doubts? Uh, that this supply zone up here. You see, I have it highlighted, right? But do I have confidence that it will hold the price? No, I don't have high confidence there. It may come up here. It may come up here to mitigate this zone, and then we can see a nice high probability trade to the downside here. All right, but we may get it here, so I'm going to keep my eye on it and look for 15-minute confirmations. Does that make sense, Sky? I hope it does. Any other questions? We're heading to the close of this 2 hour uh, webinar. Yee, bro, I see. All right. Yee. I gather you are bearish in indices. Oh man, I didn't talk about the indices. It's not on my list. What is that about? I think I did. So. Let me take a look at it. Let me take a look at it. Let me take a look at it. I've seen a couple of people say it may reach 1800. Thoughts on that? What's 1800 on who? Oh, gold. Yeah, yeah, but soon? No, no. Uh, but I'm gonna go to this thing. Just understand, because my outlook on the pound, on the USD, the US dollar, is to go higher. That 1800 look for gold here, I don't see that happening within the next 2 weeks. I see these lows being taken first, and that's gonna be a minute. But these lows are going to be taken first, in my opinion. Leslie, what's the problem? See how you neglect the indices? No, I didn't neglect it. I said I'm going to go right back to it right now. I did not neglect it. Come on, man. Leslie, you so harsh on me. Why are you so harsh? I don't understand. I try my best to do what I gotta do. All right, let me see. Look at the hi. I'm 17 and I'm interested in trading. Do you have any books or advice to give to a beginner? Leslie, direct them to where we can take care. It is not late. It's not. We got 5 minutes before 1 o'clock. Let me just do this, Leslie. If you could direct AG bag to the comment section, and to the links to where we hang out. That I'd appreciate it. Okay, so on US dollar 30, all right, US dollar 30 on the Dow, all right. What do we have? A very bullish move, up into this uh, imbalanced, unmitigated zone of supply. And we had a very nice reaction to it, right? A very nice reaction to it with a sweep before it started coming down. All right. Do I think, am I bullish on the indices? No, I am not. No, I am not. Let me see. Let me see if we can get here. All right. One of the reasons why I am not is because price came on Wednesday. Look at this candle. This is the Wednesday candle. All right. This was FOMC, right? And then we had the recovery afterwards for non-farm payroll, right? Non-farm payroll did not break that high. Now, I found that interesting. We corrected this move, but look at that correction. Look at that correction. Put your fib on it from top to the bottom, and you can see that was almost a perfect 618 recovery for this impulsive move, and then price is turned bullish, and we did not take that high back out. All right. So what am I thinking? What am I thinking? I'm bearish. I'm bearish on the indices. I believe if price does come back up and we see some follow through, we will be looking for price to turn over here. I don't. This sweep it gives me and then price given a change of character here lets me think that this was the return to impulse, and I'm looking for price to take this low. I'm looking for price to take that low. All right, right now it's weak because it didn't break the high that is responsible for it. All right, and because price did create a lower low, we didn't get a break and close here. We didn't get a break and close below there. All right, which would be more convincing for me. But the fact that we made that recovery and still price the next candle, the next 4-hour candle, did not break that high, lending me to believe that we may have some staying power here. Price may come back up and take the liquidity from that high, but I'm expecting more bearish price action to come. Once we take this high, I'm expecting more bearish price action to come because all we're doing is mitigating the supply in that wick. And these lows seem to be a buildup of bearish, supply side liquidity, and I'm looking for a price to sweep. We had a nice sweep here, and we're back here. We haven't taken that high out yet, so I'm going to look for that high to get taken. Why did that reappear? Okay, come on, get out of here. Come on, there you go. All right. Okay. Oh, let's see. All right. It's free. It's free, my dude, AG bag. All right. Hey, Stealth. God dog, man. I ain't seen you in a long time. Good to see you, man. Good to see you here. Thank you very much for showing up. Okay, so that's about it. If I look on this S&P, if I look on this S&P, you can see that all we did was we traded back into the fair value gap, and price found it enough not to take that high out. We can come up higher, but I believe the supply in here is going to bring us down. We're going to take these lows out, right? This low seems pretty weak. We have demand down in here to find. I believe we will find that demand and maybe take out that low. Okay, so that's it. That's it. I think we have a good reason to stay bearish in the indices. All right, this last leg of structure is this last leg here is bearish. It's a bearish leg, and yeah, we just peaked above the 50% of the EQ, and we could peak higher. We can come and get this liquidity up here. This is on specs. We can come and get this liquidity and mitigate this zone. If we're mitigating this zone, this supply zone by Thursday, I'm looking for this after CPI data this week. That makes sense? Okay. Guys, I'm gonna call it here. All right. I'm gonna call it here. I really appreciate you guys showing up and being interactive and all. And I'm glad we got to cover the indices. Leslie. All right. And I'm glad to see new faces here. Thank you for showing up, Sky and AG. All right. I'm glad you and Mehi. Good to see you. I hope to see you next time. Take a look at the links in the description, and join us for more information to be shared. All right, it's 2 hours now, and it's time for me to go. And I want to thank you again. All right, I want to thank you again, and make sure you trade safely. Remember, CPI data is coming. All right, so keep that in mind. If the U.S. dollar is drifting around, you got to know it's because CPI data is coming. All right. And if it's moving to the downside, we see some follow through from last week, and we see it moving down to the downside, the high probability trades are going to be to the upside. All right. If you're going to take the riskier trades against order flow, make sure you look on the 15-minute for at least a break of structure going in your direction first. Okay. I will see you in the uh next stream. And let me see. I want to end the YouTube stream first so that I can post this as soon as possible. I don't know why I'm even here. Go live. Let me see. This thing does this to me all the time.